Isn't that interesting? The market as a whole tends to go down today, but there's one outlier, and that's Nobody Sausage. And the question is, can this rally potentially last longer? We are going to look at on-chain data, we are going to look at relative valuation charts, and we're going to figure out where is a potential top in the token. Now here's the current situation. We are at 2.2 cents. Nobody Sausage went up by 4x in the last week alone. Today it almost doubled and it's now the 14th largest cryptocurrency that's trending on the Solana chain. The token has a market cap of only 21 million, and within the Memecoin space that's incredibly small. There's easily a potential 10x, maybe even 20x from here, if things, of course, turn out the right way. And so here's the big bet. The brand of Nobody Sausage is very large within social media. There are 3.3 million subscribers on YouTube. And there are 7.7 million followers on Instagram. On TikTok, there are 22 million followers. And it looks like the token tries to ride on the back of all of that popularity. Because on Twitter, we only have 15,000 followers. And in the Telegram channel, only 2,300 members. So both of those channels are directly related to the token, not necessarily to the brand. Now on Solana, we've got almost 5,500 holders. But of course, not all of those holders are created equal, right? Some of them might just hold a few cents worth of the token, arbitrage bots, for example. Others might hold hundreds of thousands of dollars worth of the token. So we have to look at this in more detail. Now, the reason why on-chain analytics are so useful here is because most trading still happens directly on-chain. So the decentralized exchange is Meteora, but of course, any decentralized exchange aggregator will also provide the token. Here's the website. It looks quite professionally made, but of course we don't get any alpha from this, right? Everybody looks at this. This is not how we can make more money than the average market participant. We have to look at data most people are not considering. And so here's the first such data point. It's the number of first-time traders versus recurring traders over time. The chart starts on the 24th of April, and so there were a lot of first-time traders, right? This was the launch. Since then, we tended to decline. But in the last 5 days or so, at least that decline has halted. We're seeing now a little bit of a revival again. What we're seeing here is the trading volume in US dollars over time. And what we're seeing over here is also the trading volume, but this time normalized to 100%. So we look at the segregation between different wallet sizes. Who's actually trading the token? Is this the big whales or is this small retail? So again, trading volume spiked at launch, then tended to decline and is now reviving again. It appears as if the small wallets, so the wallets with less than $1,000 worth of the token, trade the token less and less. It looks like the larger wallets tend to trade it more. Now what we've got over here is the number of holders over time. So on the left side, it's small retail. So those are wallets with at least 50,000 tokens. At the current price, that's roughly $1,000 worth of the token. In the middle, it's a 10x in minimum holding. So that's $10,000 worth of the token. And on the right, another 10x. So $100,000 worth of the token. We can see how the number of whales is at an all-time high. Medium-sized retail tended to rather go down, and the small retail investor with at least $1,000 worth of the token also tends to rather trend up. So in the last 3 weeks, growth of roughly 50%. But then of course the question is, who triggered this rally? Was this just the big whales? Was this small retail? The answer is in this chart. It shows the percent ownership of tokens per wallet cohort. So this here is small retail, the wallets with less than $1,000 worth of the token. They never held that much of the token anyways. That has also shrunk a little bit recently. Medium-sized retail is all the wallets up to $10,000. That also tended to rather shrink in the last days. But then we've got large retail. So that's now between $1,000 and $10,000. They had roughly 40% of the supply most of the time. But who's now taking over all of the supply? It's the whales. That's the expanding category. That's what's recently driving the price action. It's the wallets that have at least $100,000 worth of the token. They are the reason for this rally. The smart money is getting in, while the market cap, again, is only 20 million. And so this is very much an asymmetric bet. Most of those meme coins that are so small, they go to zero over time. But when we see now how the smart money, the heavyweights, buy up all of the supply, that's potentially a good sign. Tokens like Nobody Sausage definitely have the potential to do a 10x, but most of the time they go to zero. So whatever is invested here has to be play money. It has to be okay when this money goes to zero. But in general, I like tokens that are still relatively decentralized owned and where the smart money buys in. So 10 cents in the token are definitely possible. We have never seen this historically, but we are already hitting new all-time highs. So the sky really is the limit now. The question is, are the whales going to sell, or will this rally attract enough retail investors to support those higher prices? Now, some people might make the argument that all of this analysis doesn't help at all because markets are efficient. But I tend to disagree because it's people that make markets efficient. There are clearly winners and losers in the game, and the winners tend to continue to win. So it's not just a game of luck, it's a game of luck and skill. And the nice thing about crypto is that we've got much more data in this market compared to other markets because every transaction is publicly recorded on the blockchain. But very few people actually use that data properly. And that's in the end where winners and losers are born. People that don't look into the details enough, they tend to lose over time. That's the vast majority. Now, the charts that you've seen in this video come from a tool that I've developed myself on top of the Dune Analytics platform. It's part of the premium membership of this channel. There are two dashboards. There's a dashboard for Ethereum related blockchains. So those are the ones we can analyze. We can plug in any token into this tool and then we can see how many large holders are there, how many small holders are there, how many new users enter a token, and how many buyers and sellers do we have over time. It's also always useful to look at the token ownership, right? Is a token mainly held just by the whales, by the people that have more than $100,000 worth of the token? If that's true, it's potentially, especially if that happened forever, a quite dangerous token. And so this is how I think about this fundamentally. The target with trading and with investing is to be better informed than the average, to be the person that makes the market efficient. If we are better skilled than the average person, then we should over time also make positive expected value bets. That means that not every single trade will be positive, but on average, we should make money. Again, because we can estimate the probabilities better. We can see the dangers and the potential upsides better. Now, I have made more than 100 tutorial videos on various topics within crypto. How to do on-chain analytics, how to build a Dune dashboard like we've just seen. But of course, you also get access to the dashboard itself. Also about risk management, about how to properly use leverage, if that's your thing. All kinds of videos. Feel free to check them out. The newest video is this one, how to use perpetual futures and how to use the Hyperliquid platform to beat others. The videos are posted on the website, but they're also posted directly in Telegram. And here's the feedback to that tutorial. Feel free to stop the video and read through this yourself. But of course, we also need to start somewhere. And so I'm personally, of course, sharing my own trades as well as I open them. Of course, I can't share the newest trades here on YouTube, but have a look at this. This is on March 3rd. I'm adding another short, Cardano, relative to the US dollar. And the explainer was in a premium update video. So I publish premium update videos every 3 to 4 days. I then added more exposure on the 11th of March and I then closed it on the 7th of April. So of course, not every trade works out that well, but Cardano went down relative to Bitcoin by 36% during that time. And so with this membership, I want to do both. Of course, I want to make it profitable very quickly. That's why I share my trades, but I also want that the vast majority, at least of the members, takes the time to learn as much as possible. That in the end, you might not even need the membership anymore. You can make your own profitable trades. Now have a look at this. This is where our members share their winning trades. If you use the right leverage, if you know how to do proper risk management as well, you can make hundreds of % in a single trade. It's all about being prepared and knowing the data better than most other market participants. So feel free to check it out. It's currently $125 US per month. The price has been reduced because currently the attention on crypto is still relatively low. Once Bitcoin hits new all-time highs again, then I might go back to the 165. But the 125 is locked in for everybody that signs up now. So when the price increases, when you're still subscribed, your price will not increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There's also a link to Premium directly here on the right. right. Just click on that. It will lead you directly to the website. So see you next time. Cheers.